Imagine the smallest snowflake falling on a mountainside. Alone, it seems insignificant, yet as it gathers momentum, it forms a snowball that grows larger, more powerful, and unstoppable. This is the essence of compounding, the quiet force behind the most extraordinary stories of wealth creation. Today, we'll explore how compounding, regular savings, and disciplined long-term investing can transform modest beginnings into towering achievements. Let's unlock the secrets to building lasting wealth and financial security. Compounding is the cornerstone of wealth creation, a phenomenon where your earnings generate their own earnings, creating exponential growth over time. It operates on a simple yet profound principle: reinvesting returns so that they too start earning. This cycle feeds upon itself, turning even the smallest initial investment into significant wealth over time. Imagine planting a tiny seed that, with care and time, grows into a mighty tree. In the same way, a modest investment grows through compounding, especially when given decades to mature. For example, an investment of $10,000 with an annual return of 7% doubles roughly every 10 years, turning into $80,000 over 40 years without additional contributions. The secret lies in starting early, reinvesting consistently, and allowing time to do its magic. Compounding also teaches the virtues of patience and consistency. The earlier you start, the greater your financial potential, as each passing year amplifies growth. It's a reminder that wealth is not built overnight, but through the steady, deliberate accumulation of small actions. Regular savings and investment plans are the roadmap to financial success, guiding you through the complexities of personal finance. By committing to save and invest a fixed amount regularly, you harness the dual engines of discipline and compounding. This approach is accessible to everyone, regardless of income level. Whether it's a few dollars from each paycheck or a larger sum, the key is consistency. Regular contributions smooth out the impact of market fluctuations through dollar-cost averaging, where you purchase more shares when prices are low and fewer when prices are high. This strategy minimizes the risks of timing the market and ensures steady progress toward financial goals. Regular savings plans also cultivate a mindset of financial responsibility. They encourage living within your means, prioritizing future stability over immediate gratification, and distinguishing between needs and wants. This disciplined approach becomes the foundation of long-term success, creating habits that extend beyond personal prosperity to benefit future generations. Long-term investing is a journey that requires steadfast discipline and a clear vision. Like a seasoned sailor navigating the open sea, the long-term investor knows that markets are inherently volatile, with periods of calm punctuated by storms. Yet, the key is to remain focused on the horizon, trusting in the power of time and compounding. The principle of compound interest thrives in long-term investing. Each reinvested return accelerates growth, creating a snowball effect that becomes more powerful with time. Staying the course also means embracing diversification, spreading investments across asset classes, sectors, and geographies to reduce risk. A diversified portfolio ensures that setbacks in one area are balanced by stability or growth in others. Regular investing, even during market downturns, reinforces resilience. Dollar-cost averaging, where fixed amounts are invested at regular intervals, allows investors to navigate volatility with confidence. This disciplined approach prevents emotional reactions to market fluctuations, ensuring consistent progress toward financial goals. The journey to wealth is not without challenges. Market downturns, economic uncertainty, and the temptation to deviate from a plan can derail even the best intentions. Overcoming these barriers requires emotional discipline and a commitment to long-term thinking. Fear and greed are the twin forces that often disrupt financial strategies. Fear leads to panic selling during market downturns, while greed can drive speculative behaviors that overlook risk. A clear investment strategy, rooted in goals and risk tolerance, helps counter these emotions, enabling investors to stay focused on the bigger picture. Another challenge is resisting the allure of short-term gratification. It's tempting to prioritize immediate wants over future needs, but long-term investing requires delayed gratification. By envisioning the rewards of financial stability and independence, investors can strengthen their resolve to stay the course. Diversification is the bedrock of a resilient portfolio, spreading investments across various asset classes to reduce risk. Stocks provide growth potential, bonds offer stability, and alternative assets like real estate or commodities add further diversity. A well-diversified portfolio weathers economic changes, ensuring consistent returns over time. Adaptability is equally important. As markets evolve and personal circumstances change, investors must reassess their strategies. Regular portfolio reviews ensure alignment with goals, risk tolerance, and market conditions. Adjustments, whether reallocating assets or exploring new opportunities, keep the journey on track. Wealth building is not just about personal prosperity. It's about creating a legacy. Regular savings and disciplined investing teach financial responsibility, offering lessons that can be passed on to future generations. These principles, patience, discipline, and long-term thinking, become a gift, equipping loved ones with the tools to build their own financial security. Planning for the future also includes preparing for unforeseen challenges. Emergency funds and insurance provide stability, ensuring that life's uncertainties don't derail progress. These safeguards protect both the individual and their legacy, reinforcing a foundation of resilience and foresight. Building wealth is a journey defined by the principles of compounding, discipline, and long-term vision. The power of compounding transforms modest investments into extraordinary outcomes, while regular savings and investment plans provide the structure and consistency needed to achieve financial goals. Staying the course, embracing diversification, and adapting to change ensure resilience in the face of uncertainty. Beyond personal wealth, these principles create a legacy, a gift of financial wisdom and security for future generations. By committing to this path, you choose not just financial success, but the peace of mind and empowerment that come with taking control of your future. In the end, wealth is not only about what you achieve, but the impact you leave behind, shaping a prosperous and secure future for yourself and those who follow.